A new day of trading and a new list of hot trending tickers on the Yahoo Finance platform. Myles, you flagged GameStop to me. What'd you see?
Yeah, Baird out suspending its coverage on the stock and basically saying all the things that we talk about all the time on the show. With most of the move in the stock, the firm is saying attributable to social media chatter and however else you want to characterize the meme name. And obviously, when you're a sell side analyst who's very loyal to reading SEC filings, talking to management, reading the earnings call, and going about things in a pretty straightforward fashion, social media chatter, just what you kind of throw at the wall to say things that happen on the internet move the name more than anything that happens with the business. So the firm is out suspending coverage. And, Sozzi, we see $211 per share here, as we've talked about many times, and we discussed, at some length last week as well. $4 name, if we go back in time, about 1 year. So the stock went from 4 to 200. The business, maybe it got a little bit better. They brought in a whole new management team. You got an activist involved in the name. But even the most ardent believers saw this as maybe a $40 stock or a $50 stock. So I certainly have some sympathy for the sell side trying to figure out how to value this name. And as we've also mentioned, we did a special here on this program about all the meme names. We tried to get any analyst, anybody who covers GameStop to come on and talk to us about what their view on the company is. And no one wanted to do it. And I think it's because if you have coverage, you're not sure what to say. And if you are still covering the name, you're probably thinking about following Baird here and also suspending your coverage of a stock that is hard to make sense of on a fundamental basis. I mean, you can make a case for it. I think people do make a case for it. The stability of it makes a case for it to some extent. But, Sozzi, you've been an analyst. I don't really know what there is to say about something that goes from 4 to 200 in 52 weeks.
Well, I'll tell you what I would do if I was still in that analyst game. I'd strap on my big person pants. I'd make a call because you could be a hero in one direction or another. You come out, you launch coverage at a sell, put a $50 price target, and maybe be a hero that way. Or also try to be a hero, come out with a strong buy rating, say because of the new management team and the new board, the stock is going to more than double over the next 12 months. It's really hit or miss. Given the volatility in the stock, this should not be that difficult. If you are a big believer in the company, come out with a strong buy rating. Why not?
But, Saz, I see what you're saying on, you can try to be a hero, but like that's what Gabe Plotkin tried to do. He tried to be a hero on GameStop, and his firm got blown up as a result of it. And, granted, that happens from time to time in the investment game. People take big swings. They make big calls, whether it's on the long side. In this case, it was on the short side. They get it wrong, and then they have to kind of pick up the pieces and move on, as I'm sure he and his team will. But with that kind of public miss on the short side already out in the ethos, in the investment world, I just don't know how you as an analyst say, I want to stake my career or my claim on this name. Being short, recommend to your clients strong sell, $40 price target, whatever it might be, just because I don't see any upside. I mean, the upside, I guess, is you're right, but the chances, I don't know. I mean, I guess you could tell me if you were looking for more business or you were trying to take a chance, if you were thinking about getting out of the analyst game anyway, right, Sozzi? I mean, I guess maybe this is where you take your swing. I just don't see on a risk-reward basis what the reward is for trying to call, a $70 pullback on the stock right now.
Hey, what's the worst? In a couple months, you're completely wrong, and you mail in, you get the boot from your sell side shop, and you go find another job. Well, you go out and work at an Applebee's. There's lots of jobs out there. You could go find another job in this employment environment. Go get another gig. But no, the upside is that you are probably one of the best analysts on Wall Street for maybe over the next couple of years, and maybe you get attracted to a larger firm for making this one big amazing call on GameStop. Downside risk is you work at Applebee's. Upside risk is you go get paid even more money down the line.
All right, two things. One, Applebee's, fine job and certainly paying a lot more now than it has been, but it is not putting your kids through private school, which is what you're doing when you're working on the sell side. And two, as you know, the Bears don't get the promotions. The Bears have to go off and start their own independent shop and then try to continue to be correct on the short side, which is in general more difficult than being correct on the long side. It's the guys who make big calls on long names, big public names. They are the ones who get the glory and get to go from the analyst seat to the portfolio manager seat, or they open their own shop, and so on and so forth. It's the way the game's played.
Yeah, no, I hear you. Well, switching gears a bit from the GameStop trade for another meme name, Virgin Galactic, Myles. I mean, this is a stock that you and I we follow here, but the move has been absolutely amazing. You mentioned almost 40%. Looking just at the pre-market indication over the past 2 days because of the FAA announcement last week.
I mean, I'm out one day. What'd you guys do to this? What happened here? I feel like I'm behind. I'm not even up to speed. All of a sudden,
Myles, we don't recommend stocks here. We don't recommend stocks. We just talk about them.
All of a sudden, I look up and
I didn't watch coverage.
Triple on his hand.
Yeah, no, really, it's but I will say this too. I'm looking at some of the notes on Virgin Galactic out after the FAA. And I have to highlight the folks at Paragon Research. They came out and they reiterated their sell recommendation. They're in no way believers in Virgin Galactic, saying the company is likely to have to raise money at some point in 2022. The orders to fly to space has not changed in the past couple of months, and that their business model essentially is flawed. So hat tip to Paragon. We were talking about analysts making a big call. They, in fact, are.
There you go. I mean, yeah, I'll say this. It is strange at this point in its company's life. They get FAA approval to maybe send some passengers to space. I don't know how much those people are going to be paying, but the company has a $13 billion market cap. And, don't give me this whole deal about we're discounting future growth here. But if we're talking about like 100 people paying 200 grand to get on this plane, you're going to pay, 100,000 times multiple on that revenue for this thing? I don't know. It seems like a lot, right? It seems like a lot.
Would you go to space?
No, I don't even want to. I'm afraid of regular.
But the FAA says it's okay, Myles. You're good. You're good.
I'm trying to avoid taking a flight to anywhere, Miami, Denver. If I can drive, I'm gonna drive in general. Anyway, we'll save that for another time.
All right, last but not least, last one on our ticker is a name that I'm calling Intella. The ticker symbol is NTLA, but that's not the company. It is a therapeutics company. Seeing some good news this morning, Myles.
Yeah, gene editing, which is another part of kind of the, Illumina is a name that's in that space with the CRISPR technology. Kathy Wood has kind of been around this technology. And I think, the move that we're seeing here in Intellia on some positive news on basically a treatment for an extremely rare heart condition, at least as far as I understand it. I really know, what the company is doing beyond the fact that the stock is rallying. But I will say this about this name, and we've seen a couple of these in the last few weeks. Saz, you and I both know that the original kind of meme names, and I mean meme name in, you throw a couple of lottery tickets around there and maybe it goes up 50%, 100% in a short period of time. That happens in the small cap biotech space. That is where people make a living playing these kinds of names when you know that I remember, my first job, you're trying to read presentation schedules from these small industry events where a company, EVP that no one has really heard of might make positive comments, for example, as happened here, on a company's obscure treatment for some extremely rare condition. That can be a 40% stock move on a name that doesn't have a whole lot of market cap. And so we've seen a few of these come up. Maybe it's just that we weren't paying attention to these kinds of binary events as much as the meme train happened. But for new entrants into the market, they are certainly learning that small cap biotech is a fun place to play. But it's fun when this happens. You can also see, I've seen names down 80% in a single day when it becomes clear the company's one treatment isn't going to work. And, the only option then is really to wind down operations or maybe sell some of the IP for scraps or whatever. But, this is the original lottery ticket space.
Yeah, this is OG meme trade. I'll just add this before we head to break, Myles. These are biotechs. It's just incredibly complicated companies. You essentially have to be an expert in this field to find a home run such as this. You have to wake up every single morning of your life focused on the biotech space and maybe a handful of companies that may or may not have positive phase 1, phase 2, or phase 3 data out at some point in the future. It's a very hard space to follow. Hence, you see when any form of good news, even minor good news, comes out, you see moves like this we're seeing in Intellia Therapeutics, again, ticker symbol NTLA, or as I'm referring to today, the Intella trade.